Right. Welcome to today's session on FAC 1501 and 1502. Right. Today we want to move on from where we finished the other time. We were doing bank reconciliations. So today we want to move on to control accounts. And I'll briefly explain the issues that are involved. Then we'll then turn on to using the questions that I sent to you some time back. That means I think during the weekend. Then we're going to use those questions to do the answering. Right. Uh, what happens is most organizations, to improve their sales, they sell on credit. All right, let me just. I think you know that most people, if you say you're selling for cash, many people will not even buy for you. But if you say you're selling on credit, even if it's at a higher price, you'd find that you get many people buying your product. So because of that, because of the attractiveness of credit buying, you would find that most firms they grant credit, right? So I think most firms grant credit to customers in order to boost their sales. So you'd find that businesses, they buy and sell on credit. So they will be buying, and at the same time, they will also be selling on credit, right? Customers who buy from the business on credit, are called debtors. Or trade receivables.
So I think you made a mistake on your first bullet point. Most firms grant credit
Hello?
cards, not credit. Saying I think you made a mistake.
You mean the credit?
Sorry, sir, if there's no mistake, sorry, sir.
You mean which part? Is it the one that I've just corrected?
Yes, I'm saying if there was no mistake, then I'm sorry.
Right. Customers who buy from the business on credit are called debtors or trade receivables. And suppliers from whom the business buys on credit are called creditors, trade payables. Right. So you'd find that a business will keep records of each and every credit customer. And at the same time, they will also keep records of each and every supply. So they will keep records of each and every customer, and also a record of each and every customer. Right. So I think records will be kept of all the transactions with credit customers. and credit supplier. And in the ledger, these records will be as follows. Right. Our main ledger. In our main ledger, we'll have two accounts. That is the data's control account. This is one account for all the customers, which records transactions in total for all customers. For example, when we record credit sales in the data's control account, we don't have to think about these ones were for Zuma, these ones from Becky. It's just for all of them, all our credit customers, without identifying the buyer. We just take the total from the sales journal. So in the data's control account, there is no identification of the particular customer. It's all our customers in one account. So the data's control account gives us what all our customers owe us at any particular point in time. Right. At the same time, they also maintain a creditor's control account. This is one account for all the suppliers. All the credit suppliers, not all suppliers. Even here is the credits. In our control account, we only record the credit customers only. We don't record cash customers. Which records transactions in total. For all suppliers. So when we record the credit purchases, it will not be for that particular customer or another. So we have one total for all of our customers. Right. So that will be the general ledger. Right. In addition, they keep what are called subsidiary ledgers. Right. Number A will have the data's ledger. Right. Now in the data's ledger, the account of each customer one by one, each separate customer, is maintained. So in this account, we can clearly see that this one, Sipo has got owes us 30,000. Brian owes us 50,000. Lawrence owes us 20,000. So it's very clear. Each person, the transactions of each person will be in his or her own account. So there will be an account for each and every customer. So this data's ledger is where maybe when you go to Edgar's, when you want to see your account, that's where they see your balance. Because they, in that data's ledger, it will be your own transactions without including those of others. So in the general ledger, you don't appear there in the general ledger. It's all the customers in total. But in the subsidiary ledger, in the data's ledger now, we now have each and every account one by one for each and every customer. Right. Then we also have another subsidiary ledger, which is called the creditor's ledger. Right. The creditor's ledger the accounts of each separate supplier are maintained. So we'll have Chambers Wane's account, Peter Shaluli's account, on and on. So each and every particular creditor will have their own account, whereby we can tell that in this account, Denclate, we owe so much. Right. So that is the creditor's ledger. So you would find that the general ledger, it's in total. The subsidiary ledgers one by one. So the general ledger and these subsidiary ledgers, they record exactly the same things. Only that the general ledger records in total, whilst the subsidiary ledger records one by one. For example, we remember that we did the sales journal. So on each day when we sell to each customer, we make a record in his account in the debtors ledger on that very day that we sell. But in the general ledger and the debtors control account, we only enter at the end of the month. That's when we take the total sales for the month and then post it to the debtors control account. So at the end of the day, we are recording the same things in these two ledgers. Only that in one ledger we're recording in total, in the other we're recording one by one. So at the end of the day, they should have the same balances. And if they do not agree, we have to do a reconciliation. So that's why you will see that we'll be doing a reconciliation. So a reconciliation is necessary to explain the differences that are happening between our control accounts and our individual accounts. Because theoretically, they should always have the same balance. Even practically anyway. Right. So now we're going to show the transactions that have to be entered in each ledger. Right. So now I will show you. Let me just do this. Right, a debtors control account. A debtors control account, or even if you are preparing so that means whatever I'm doing here, it applies to the control account on when we prepare it for all the customers, or when you do them one by one. So as long as it's a customer of a customer's account, we should remember that a debtor is an asset. Because it's an asset, it will increase on the debit side. Remember our rules of double entry. So debtors increase on the debit side, and it will decrease on the credit side. Right. So transactions that increase. So in short, we're saying transactions that increase the amount owed by our credit customers. Entered on the debit side. Of the credit customers accounts. And on the other hand, he was saying transactions that decrease the amount owed by owed by our credit customers are entered on the credit side of the credit customer's account. So if you're in a debtors account, you just have to check, does this transaction increase or decrease the debtors account? Then if it increases, record on the debit side. If it decreases, record on the credit side. Any questions? Right. So examples of transactions that are entered in the debtors control account. So we said on the debit, we include the things that will be recorded in the, that will increase the amount owed by the credit customers. Right. So now we want to see which types of transactions. Right. Normally, our balance brought forward is usual on the debit side. Remember that debtors is an asset. Because it's an asset, the normal balance is recorded on the debit side. But they can be also, okay, I'll go to that side later. The things that increase the amount owed by our customers is credit sales, for example. If we sell to them on credit, whatever amount they are owing us will go up. If we sell to them on credit, whatever amount they owe us will go up. Right. We also usually enter refunds if there's an overpayment. We have to cancel that to reverse. This one will be a reversal. It's not necessarily a reduction of the debt, but it will be a reversal. So we have to record it on the debit side. Interest charges on overdue accounts. If a client has got an overdue account, they can say, if your account is overdue, we charge you interest. So that interest will increase the amount owed by that client. Right. We can also have credits, customer balances to be transferred to creditors control. Right. As we said, a customer is an asset, a data is an asset. So because a data is an asset, we normally expect them to have a debit balance. But it can happen that they can have a credit balance. If they have a credit balance, it means that the business will be owing them. That means you are owing your customer, which is abnormal. Right. This can happen, for example, the customer pays you, buys goods on credit, then they pay you for those goods. After paying, then they discover that they no longer want or the goods were damaged when they were sent to them. Or maybe you sent the wrong goods. Then they return the goods after paying. So you'd find that it is possible that in that scenario, they can have an abnormal credit balance. So if we don't expect to fulfill their what we owe to them in the short run, or replace those goods, we transfer the customer from the debtors to the creditors, because the customer will now be a creditor, because we'll now be owing the customer. So instead of keeping him in the debtors, we'll then move him from the debtors to the creditor, because it's us now who will be owing the customer. Normally, this is done when we know that we're no longer going to sell anything. But if we know that we'll sell some things in future to the customer, maybe the customer is a permanent customer, we keep him in the debtors ledger. When he buys, then that amount will be utilized on his account. Right. So those are some of the transactions that are entered on the debit side of a debtors control account. As we go, we're going to see more transactions. Right. Then on the credit side, we can also have a balance. this will be an abnormal balance, as I said, because normally we expect debtors to have a debit balance. So that means here it will mean that we'll be owing the client. So at the end of the day, we might need to what? To the client will be having a credit balance, so you'll be sort of a temporary creditor, you know. Right. Then the transactions that reduce whatever is owed by our clients will be recorded on the credit side. So the things that we record, they include the following things that we are going to be talking about here. Right. When they pay, whatever they owe us will reduce. When they pay, whatever they owe us will reduce. Right. So we're saying bank, which is payments by debtors. Sales returns. Maybe they are not happy with goods. There can also be other allowances. Allowances granted. Maybe we can say we're giving, it's our birthday of our shop. We're just giving all loyal customers who have been with us for 5 years or more a 10% reduction on their balance. So that can also reduce whatever we owe them. Right. We can also have right. We can also have settlements, discounts granted. Some customers may pay early and we might need to give them discounts. Right. Then we can also have I talked about bank sales returns. Yeah, right. We can also have credit losses. Credit losses are bad debts. These are customers that we are writing off because we failed to recover our money. So we have to write them off. Right. So those are the common transactions that we normally have. I think here also left out debits, supplier balances, transferred from creditors control. It can also happen that our suppliers are now owing us. So we can decide to what to transfer them, because they are now owing us, we can make them a debtor. Right. So this is a debtors control account. Let me just show you also what we record in a creditors control account. Creditors control account, that's our suppliers who sell to us on credit. This is a liability. Right.
Sure.
Yes.
Is it me or am I not understanding that thereby that debtors control assets? You say transactions that increase the amount owed by our credit customers. I'm saying, is it me or I don't understand thereby debit? Debtors control assets. Where you say transactions that increase the amount owed by our credit customers are entered on the debit side of the credit customer accounts, and then on the credit side, you said transactions that decrease the amount owed by credit customers are entered on the credit side of the credit customer accounts? Why not debit accounts? If on the
No,
debit,
when I say credit customers, I mean the customers who are buying on credit. I want to emphasize that these are not cash customers. We're not talking about that credit. This last credit is not talking about the credit side. It's talking about the nature of the customer. That is a credit customer.
all right.
Is that right?
I just want to understand.
So here we are saying transactions that decrease the amount owed to suppliers are entered on the debit side. Of the credit suppliers accounts. Right. Remember, a liability, it increases on the credit side and reduces on the debit side from our previous topic. So creditors are liabilities. So anything that decreases what we owe our creditors is recorded on the debit side. And anything, maybe let me just decreases on the debit side. It's the opposite. If you see here, it was an increase on the debit side. Then, but this one increases on the credit side. Right. Transactions that increase amount owed suppliers entered on the credit side of the credit supplier account. All right. Let's now look at our examples of those transactions. Right. The transactions that decrease, that is bank payments to suppliers. Purchases returns. When we return goods to the suppliers. Other allowances granted to the business by suppliers. Can also be recipients of allowances. Settlement discount received. We can be given a discount right. We have settlement discount received. Right. Then the things that increase what we owe our suppliers with credit purchases. We have interest charged on overdue accounts. If we don't pay on time, we are charged interest. We also have refunds from creditors. We have credit these things here, they are also entered this side. Because they will be transferred from one of these accounts to another. All right. So here we'll be saying credit customer balances to be transferred from debtors control when we're here. Then debit supplier balances to be transferred to but there'll be one in the same transaction. Right. Any questions?
Not now, sir. I think I'll understand more if we do
I can hear you.
questions. I'm saying I'll understand more if we do questions, but then as for now, no.
Okay. Right. So now we'd like to use one of the questions.
Wait, I'm still writing.
No, don't worry. This document, remember that you get it by today. So don't worry about writing and stuff like that. You can always do it at your own time. Rather concentrate on listening. Because I will send it by today or latest tomorrow morning. Right. Let me just open the document that we'll be using. Right. I'll be using the document that I sent to you a few days ago. Right. They will do question 1 today. Then in our next class, we'll try to finish off. Right. The following information was extracted from the accounting records of the Zovenza traders at 31 March 2016, the financial year end of the enterprise. Right. Totals of the subsidiary journals. Then prepare the following accounts properly balanced in the general ledger of the Zovenza traders on 31 March. So we have to prepare a debtors control and a creditors control. So basically, we should know that if a transaction is to do with our credit customers, it will go to the credit debtors control. A transaction to do with our credit suppliers, it will go to creditors control. So debtors control, credit customers, creditors control, credit suppliers. And we don't record transactions with cash customers. So when you buy in ShopRite, you don't go in the debtors control, you are not their data. You don't owe them anything at whatever point in time. Right. So let's do the financial statement, the accounts. Right. I will do them here. Right, so that's Zizomenza Traders. Right. Data control account. We'll have our dates, our details, folio, amount. Dates, details, folio, amount. So we'll do it at the same time. This will be B, creditors. Right, so we'll know that if it has to do with creditors, it will go in the creditors control account. To do with debtors, it has to go in the debtors control account. And this question that we're doing, you also have to combine with your knowledge of the books of original entry that we're doing. Right. Right. Normally we start with the opening balances. So we're told that the balances at 1 March, these were the balances. So you can see that the debtors control had these two balances, one on the debit and one on the credit. So we just have to record the one on the debit, we record on the debit, the one on the credit, we record on the credit. The same with the ones on the creditors control. Right. You should know that the normal balances are these ones. For the debtors control, the debit balance is the normal. For the creditors control, the credit balance is the normal. The other two are abnormal balances, but they can exist in a practical scenario. Like you can have a debtor who at one particular point in time you will be owing the debtor, maybe because they overpaid. And the same can happen that our creditor might be owing us. Maybe it overcharged us and we discovered it later. So what if it's a debit balance, you enter it on the debit side. If it's a credit balance, you enter it on the credit side using the debt, our debt at the beginning of the year. Right. So we're going to say here in the debtors column control, we'll say 2016. Let me just do this. Right. Then we've got March 1. That is our balance. Brought forward. The one on the debit is 32,780. Then we'll have here 2016 March 1. So you can have these accounts can be an abnormal scenario where we've got two balances brought forward, one on the debit and one on the credit. So in the debtors ledger, it simply means that when we've got the balance on the credit side, it means we are owing our customer. Our customer who is normally supposed to owe us is actually we are owing the customer. Right, so that is 178. We do the same here. Maybe let me just format also. Right, so that's 2016 March 1. Balance brought forward is 2020. Then we have 2016 March 1 balance we have 24,720. Right. Right, so please guys, I had to go here because we needed the opening balances. That's why I had to start from number 3. Then you can also read the additional information because there might be some things up there which may be affected by this. Number 1, an additional amount of 1,450 relating to a data that disappeared should be written off as irrecoverable. So when we record credit losses, we should remember to also record this 1,450 on the credit side. Remember, it will reduce the data, so it will be recorded on the credit side. Then on the second, number 2, the credit balances of debtors and debtors balances of creditors on 1 March should be transferred to the creditors control account and debtors control account respectively. I want you to read this properly. The credit balance of the debtors, this is the debtors. That means they are talking about this. And the debit balance of the creditors, this is the creditors. The debit balance is this. Should be transferred to creditors and debtors accounts respectively. Why? Because although this is in debtors, this one is now a creditor because we're now owing this customer. And this one, although these are in the supplier's ledger, they are now owing us. So we're saying they should be moved from the creditors to the debtors to properly show their nature. Right. So amounts transferred in the debtors control accounts, we record them on. I think I showed you that amounts transferred from the creditors to the debtors or from the debtors to the creditors, we record them on the debit side of the debtors control and record them on the credit side of the debtors control. So we're going to have, let me just show you. This amount is going to be transferred to creditors because this debtors. So to transfer it, we come here and we're saying 31. Then we say creditors control because it's going to be the creditors control account. Right. Normally it's the general that does the transfer. That's why I'm saying GJ. That's the 178. So they will now cancel each other. We've removed these guys because we're saying they are now creditors. Then we come here and record them in the creditors control where they belong. 31. Then here the details will be data's control to show that they are coming from the data's control. Right, so that will be GJ because this transfer is first recorded in the general journal. Then this was what? 178. Right. Then at the same time, this 2020, these are suppliers. They are supposed to remember that suppliers are supposed to have credit balances, but they are having debit balances because we are owing them. Simply because we are owing them, sorry, because they are owing us. So they are no longer a creditor, they are now a debtor. So we have to remove them from this creditors control to the debtors control. So again, they are recorded on this side to cancel them off here. Right, debtors control. GJ, that's 2020. Then the same amount comes here again on the debit side here. Right. So this transaction, we are removing these debtors whom we are now owing from the debtors control so that they go to the creditors. And this one, we are receiving clients who used to be creditors, but because they are now owing us, we are now taking them into the debtors because they are now owing us. So you should know that generally, any transfer of a debtor to the creditors ledger or from the creditors ledger to the debtors ledger, we record on the debit side of the debtors control and record on the credit side of the creditors control. Right. Then number 3, the allowance for credit losses should be increased to 2,432. Right. Allowances for credit losses are not recorded. In control accounts. We only record actual credit losses. Right. There are 2 things here. We have what we call credit losses. Credit losses are bad debts. That means we are happy, we are satisfied that these guys have failed. Not that we are happy, sorry, for using the wrong word. That means we are satisfied that these guys have failed to pay. So we are writing them off. So those ones have to be written off from the debtors. But in allowance, we are not writing off any data, but we are saying there is a possibility that some of the debtors might fail to pay in future. Maybe they now have a long time without paying, but they've not yet been written off. So an allowance for credit losses is not recorded in the debtors control. An allowance for credit losses is not recorded in the debtors control. We only record actual credit losses like that one on number 1, which they said is supposed to be written off. So please, this one will not be recorded. We will not record it anyway when we are doing control accounts. Right. Then number 4, during March 2016, merchandise to the value of 2736 was purchased on credit. This transaction was erroneously recorded in the sales journal and posted from there to the general ledger and debtors ledger. Right. This is a purchase, but unfortunately, it was recorded as a sale. So remember, when we record the sales, we should take out the 2736. And when we record the purchases, we should add the 2736. Right. So we now know the additional information. So let's now deal with our things now. Number 1, sales journal, sales plus VAT, 16,840. Now in the sales journal, we record credit sales. So credit sales, they have to do with debtors. So we're supposed to record this on the debit side of the debtors control because it means they bought on credit, which increased their balance. And we should remember that we should take out this 2736, which was included by error. Right. Now, when they say it's in a plus VAT, that is very correct. Sales are always supposed to be included in the debtors control, including VAT. So we would say here, I want you to see how we record this on the debit side of the debtors, because this is a sale to credit customers. I knew that this is a sale to credit customers because in the sales journal, we record credit sales. Right. So this one, we're going to say sales and VAT output. On sales, we've got VAT output. Or you can just say sales and VAT. That's our sales journal. Right. Then can we please do a calculation here? We need to take out that other amount. So we'd say 16,840 minus 2736. What do we get?
You get 14104.
14?
14104.
04. Thank you. So that would be our sales. Right. Then we go to the next one. Purchases journal, purchases plus VAT. So purchases journal, that means these are credit purchases. Remember from our books of original entry. So that's a credit purchase. And remember, we should add the 2736. Right. Credit purchases are recorded in the creditors control account on the credit side. Why? Because they increase whatever is being owed to our suppliers. When we buy on credit, the amount we owe our suppliers will be recorded on the credit side. So please to know where you record, you can just use the templates that I gave you here. Right. So here that will be purchases and VAT input. So we'll take the figure that is given, that is 12,480. Then we add that amount which was wrongly included in sales, which is 2736. What do you get?
Wait, sir, the other one we were minusing, ne?
Yes, we were minusing because it was wrong to include it. It was supposed to be here. Here we're adding. It was a purchase, but it had been wrongly included in sales.
So it's 15,216.
14,000.
15,000. 216.
Thank you so much, sir. Right. Then the next thing. So we've dealt with number 4. It's done now. A sales returns 1,200. When customers return goods, this will reduce what they owe us. So we record on the credit side of the debtors control account. So this will be 31. That's sales returns and VAT outputs. SRJ for sales returns journal, 1,200. Right. Then we have purchases returns journal. That means we are returning to our suppliers. This will reduce the balance of creditors. So it goes in the creditors control on the debit side. So to come here. Purchases returns. and VAT input. Purchase returns journal. That is 820. Right. Then the sales column in the cash receipts journal. Sales column in cash receipts, that's for cash sales. Cash sales are not recorded in the control accounts. The same also applies to this one. Purchases column in the cash payments journal, that's cash purchases. Cash purchases are not recorded in control accounts because they have nothing to do with our debtors or creditors. So we would also say that cash sales and cash purchases are not recorded. Control accounts. In the control accounts, we'll only be recording those transactions that pertain to credit customers and credit suppliers. So cash transactions are not recorded. That means if customers buy for cash and if we sell to them on cash, the only cash transaction that we record are payments from our debtors and payments to our creditors, which is this one here. Debtors column in the cash receipts journal. That means they paid us. If it's the cash receipts, we received money from debtors, that means they paid us. When they pay us, the amount they owe us is going to reduce. So it will be on the credit side here. We'll have bank settlement discount granted. And VAT. That is the CRJ for cash receipts journal. Don't be surprised that I'm saying settlement discount. The column of the trade payables, if you go back to our books of original entry, in the CRJ will include the total amount of the amount received to the gross amount, which also includes the settlement discount and the VAT. Right. And settlement and VAT on settlement discount granted is considered to be VAT input for this module. Right. Data's control column in the cash payments journal. When data's control appears in the cash payments journal, there can be two reasons. Either it's a refund or these are RD checks from customers. But whatever way, we have to record them on the debit side of the control account. So payments, like if there is an entry in the data in the cash payments journal for debtors, that means we are paying our debtors. Normally our debtors should be paying us, but we are paying them. So that can be due to two reasons. Either we are giving them a refund, or maybe it's not that they were paying them, but it's because of a dishonored check that had been received from the debtor. Right. So the amount is 3,200. Right. Then settlement discount column in cash receipts journal. Right. You should be very careful. As long as you are given the debtors column in cash receipts, that amount of 22,750 already includes that 500. So you don't have to record it again. You'll be double accounting. So if they say debtors control column in the cash receipts journal, that means you know that that amount already includes the discount. It will be including the discount already, so there's no need for you to record the discount again. Right. But if they'd said here, if they'd said cash payments, the amount received from debtors, if they'd said amount received from debtors, then you know that it might not include the discount. So we could record the discount on its own. But they said debtors control column. So if they say debtors control column, you know that it already includes the discount. You don't have to record the discount again. Right. Then creditors control column in the cash payments journal. That means we are paying our creditors. Cash payments journal, that means we are paying our creditors. And when we pay them, that will reduce the amount we owe them. So we'll go in the and creditors reduce on the debit side. Creditors reduce on the debit side. Cash payments journal, it means we are paying our creditors. So that will be bank, settlement, discount received. Remember, I told you that if they say a trade payables column, it already includes the settlement discount received and VAT output. That's CPJ. The amount is 3298. Right. Then again, just like on the debtors, this settlement discount received, if they say creditors control column, that means this 2890 is already included in this 32. So if you include it again, you will be double accounting. Right. Then we've got sundry journals. For the debtors control, we have sundry journals, sundry debits, and sundry credits. That means there are many other transactions that causes a debit and a credit on the debtors journal. So these ones we just record them on the debit. We don't know what it is, but it means they were debit. When they say it's a debit, that means they were debiting the control account. This can be interest on overdue accounts, for example. These ones can be allowances granted or credit losses. So you just say if you are given general entries, if they are debit, you record on the debit. If they are credit, you record on the credit. So I'm going to say here in our cash receipts journal, sundry debits. They are in the general journal 2760. Then we also have sundry credits. Okay. That's 430. We do the same for this one here. This one, the general ledger, we don't know what it is, so we don't have to record it. There is no link with our journals. But this one, we know that this is creditors control. So we would record this amount on the credit side because it's appearing on the credit side. So that 840, we're going to come here and say sundry credits. GJ. That's 840. Right. So we're done with number 2, we're done with number 3. I think there's only one transaction. Number 2, 3, 4, additional information were done. It's only this one. An additional amount of 150 of a data that disappeared should be written off as irrecoverable. Remember, I said allowances, that is on number 3, we don't record, but if we have to write off a data, we record. So that is the 1450 there. When a data is written off, remember from the notes I said you record on the credit side. Credit losses. Credit losses are recorded in the general journal 1450. Right. So we have now recorded all the transactions. After recording all the transactions, now you have to balance the account. Right. I'll take you on the balancing. So we'll do them one by one. Remember, first of all, you put your total in the same line. Your total should be in the same line, and it should be the total of the side with the bigger total. And our bigger side in this case is the credit side, it's the debit side. So we'd find our total. That will also be the total on the credit side. So you enter the larger total on both sides. On both sides, including the smaller side, in the same line. Then the difference will be entered on the smaller side. It will be entered as balance carried forward, which will be the difference right. Then you also bring it down on the bigger side below the total on the first day of next month. It will now be called balance is that same figure. That's how we balance the control account. In fact, the balancing procedure is the same for whatever account. Then I will do the same on the creditors ledger control account. I'll put in the same line the totals. The bigger total is the credit side. So you put the same total on both sides always when you're balancing an account. And the bigger one will be the one that you enter on both sides in the same line. Then on the smaller side, we enter the difference. That will be called the balance carried forward. We subtract right. Then on the first day of next month, again on the bigger side, right. This is how we prepare the control accounts. Any questions on the control account?
Not now, sir. I think more
Right.
practice.
If you don't have any questions, please review. And then maybe you can try to also do question question 2, question 3. Question 3, like there are errors there, then you just have to prepare the correct one. I think it also follows with question 4. Also, there are errors there. But maybe you should do it after we have done question 2. So next week we will do question 2. Right. Then next week, I think Monday, I might not be available. So the class might be on Tuesday. I will inform you. Either would, but this weekend I'm too tight, so I either would do it weekend, but now my weekend is hectic this weekend, so we won't meet weekend. But I will tell you either we'll meet next week Tuesday. I'll be informing you on the group. Thank you so much, and God bless you richly.
Yes, sir.